Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily NVIDIA report for Thursday, July 18th, 2024. But before we check out the charts, I just want to ask you to please click like, share, subscribe, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos, just like the daily Tesla and daily NVIDIA reports, daily analysis in the SPY, daily analysis in the Triple Q, weekly analysis in the S&P 500 index, the NASDAQ 100 index, and Apple stock, as well as 2 individual stock picks a week that you never see on YouTube that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor, always looking for 20% moves or more on those underlying stocks. And you get to see all of this for free. We offer a 5-day free trial up front. So check out wickedstocks.com. Let's take a look at the charts. The first one I'm going to show, and I'm not going to show this anymore for a while, but I do want to underscore that I've been mentioning now for the last few weeks the fact that the Triple Q, of which NVIDIA is an important component, has been testing its own 4.5-year channel top now for the last 3 weeks, and it fell away significantly on Wednesday. There's more of that, where that came from. I think you should know those targets, those support levels. There will be probably some degree of correlation with NVIDIA, but just knowing what this broader index is doing is an advantage in your trading, in my opinion, and that speaks to the possibility of becoming a wickedstocks.com subscriber. So you might want to check that out, and I'll just leave it at that. So let's get on with the charts today for NVIDIA. We did close Tuesday below this meaningful 2-week channel bottom. That set off a sell signal, a 1 to 2 week sell signal. I said 2 to 3 weeks, 1 to 3 weeks, depending on volatility. Well, volatility has certainly spiked, as it's prone to do with this stock, and we are probably 70% of the way to our objective in one single day. Now, we've been skewing a sell signal for the last week anyway, if you recall. We don't show it anymore on the charts, but there were several channel structures. One was a long-term 6-month channel. The other was a 2 to 3 week channel, all in the low 130s, upper 120s that we closed below about a week ago. There was hesitation for a few days, and then we basically said that a settlement below 128.47 would be the next shoe to drop, as it did on Tuesday. So playing the short side on Tuesday's close was the name of the game. Hope you actually pulled that trigger. You may have fared pretty well if you did, depending on whether you just sold NVIDIA outright, or at the very least you bailed on a long position perhaps, or maybe you reached for those 110, 115 out of the money puts, and that could be a great play by now, depending on your expiration, so forth and so on. But 112.44 to 112.85 remains, to call it a 1 to 2 week target now is silly, unless we happen to rally up to 128.47 over the next few days and then fall away again. That is always possible, of course, but 112.44 to 112.85 remains our objective, whether it's today or by some point next week. I will say that on the way down, we have 115.87, soft intraday support level. We could get a decent bounce here, maybe for the day. That is always possible. If we break 115.87, now that's a 3/8 off the April low against the June high, we could bounce here. We were mentioning this, as if you may recall, following the June high as a support level, one of several that we were looking at. And then so we kind of backed away from it, obviously, on that 2 to 3 week rally. But here we are again. 115.87 can contain intraday support. And upside today, 123.88 can contain intraday buying. So you see them both actually right here. 115.87, your 3/8 Fibonacci, able to contain intraday selling, above which we could test 123.88 today. Simple descending channel top over the last week that can contain intraday buying. Now, under other circumstances, we might call these able to contain daily activity, but given the heightened volatility, we just want to keep it light, give the market room to breathe. We are anticipating 112.44, and if we break or open today below 115.87, 112.44 is likely. 124.44, part of a range that begins at 112.85, able to absorb selling not only through next week, but into August trade. From here, I could see this descending trend line. Now, we're not committing to it yet, but once we test the channel bottom, the trend line upon which it's based becomes a channel top. And so if we test the 112 area today, today, I think once again, it's like the low 130s, upper 120s, low 130s. This coming down, this formation going up. They will converge over the next week and a half. So it could get a little wild in here as we bounce off of 112.44 to 112.85 and then round back up within several weeks into the upper 120s, low 130s. I think that is the play. So if we happen to test this area today, this is, number one, an opportunity to cover a short position you may have established over the last week or on Tuesday's close below 128.47 and consider reversing and going long. Going long back into, really, it is the upper 120s, low 130s again. So that might, if you're an options trader, mean just reaching for 128 or 130 strike out of the money calls that don't expire. I would go a month at least out on that. This is probably a 1 to 2 week play to the upside. And we could trade inside of this for a while, for another week or two. Now let's talk about the upside today. Once again, I do have that descending channel top, steeply descending channel top at 123.88. We also have 121.85 that precedes it. We scratched our head for a moment today, determining whether it should be today's high of 121.85, not today's, sorry, yesterday's. We do record these the day before. I'm recording this video on Wednesday afternoon after the markets close. So when I say today, it is literally that for me. But Wednesday's high was 121.85. It has upward pivot point qualities in its own right, but I do like 123.88 because it still does not close the gap. There's a 3/8 Fibonacci in the same vicinity. It can contain buying intraday, possibly allowing the market to fall back within the day to 115.87 and vice versa, I might add. Now, I don't see it today after everything that's played out over the last few. What I'm going to say is I don't see us pushing through 123.88 and then testing 128.47 within the day. What could happen is later in the day, we push through here, close above 123.88, and then tomorrow test 128.47, which can contain buying on a weekly basis, which is to say, really, if we're talking Friday through next week, and from there we can fall away again into the 110s, into the 112.44 region. Of course, closing above 128.47 would be, it's not a long-term buy signal. We've got more up our sleeve, more upside areas that need to be violated for that to occur. And I'm just not going to go there right now because it's not needed. Once again, I don't know if I mentioned it or not, but on Wednesday, we put out another stock pick on Caterpillar. You might want to check that out. It's in this sort of tentative phase of yielding what we consider to be a solid 20% return on a buy. We're not there yet, but we're close, and you should know what those parameters are, in my opinion. If you want to take part in that, check out wickedstocks.com. You can see it for free by participating in our 5-day free trial. Also, I just want to remind you that you also get the Triple Q and NASDAQ 100. We do weekly analysis in the NASDAQ 100, daily analysis in the Triple Q. These are two indexes I think any NVIDIA trader should know about in terms of big picture long-term resistance areas. It doesn't surprise me at all that over the last, part of why the NASDAQ has fallen as it has, of course, is because NVIDIA has fallen. It set off a secondary sell signal on Tuesday below 128.47. I'm going to stop now. Please click like, share, subscribe. I'll be back tomorrow with Friday's NVIDIA report. You have a great evening.